Welcome to the Vital Dawn podcast for Tuesday, July 6th. The U.S. equity futures indices are essentially unchanged across the board. Dow, Nasdaq, and S&P are moving no more than 2 points in either direction. So essentially unchanged U.S. equity futures. The major European indices are trading flat to down 30 basis points. You're seeing underperformance in autos, banks, insurance. You're seeing outperformance in basic resources and energy. So commodity-linked equities are doing well in Europe. Asia was mixed overnight. You saw some rebound in the Nikkei in Japan. The Hang Seng and the Shanghai Comp finished off small. So there is a ton of news to go through over the last 3 days, given the long U.S. Holiday weekend. I have everything in the piece this morning, so make sure to check it out. I'm not going to be able to run through all the various different items. A few of the highlights to note. So obviously oil very much in focus over the weekend. There was supposed to be an OPEC decision last Thursday. That meeting extended into Friday, extended again into Monday. They still have not reached an agreement. The very, very near-term implications of that are positive. The OPEC plus group of countries was supposed to bump output by about 400,000 barrels per day in August. So presumably, given that an agreement has not been reached, output will stay unchanged at a lower level going forward. So that has helped push crude prices higher. This morning, you had Brent above $77 a barrel. I'd be very hesitant to chase oil higher from here. I do think that they will reach a consensus agreement relatively quickly. It does not seem to be the case that there are very severe rifts within OPEC. The United Arab Emirates is the one country that is in opposition to the production agreement that had been reached among all the other various different countries. It has been the case in months and quarters past that Saudi Arabia and Russia have been at odds about output. That would be a much more severe rift. I personally don't think that this one is going to tear apart the cartel, as some of the headlines would suggest. And even if that were to take place, and this kind of results in the disintegration of OPEC, the result would be higher output, as a lot of countries will then start to just pump as much as possible. There won't be coordination on production. So, I think beyond the very, very near term, I think the implications of this are, if anything, negative for crude prices. So again, I'd be very hesitant to kind of dive into oil at these levels, or even oil equities at these levels, just given that I think you are going to see kind of a lot of the OPEC noise start to die down going forward. So that's oil. That's probably the biggest macro piece of news out from over the weekend and this morning. The Royal Bank of Australia became the world's latest central bank to kind of start to dial back the pandemic era accommodation. So again, moving very, very gradually, as all the other tightening central banks are, but nevertheless beginning that process of kind of just starting to normalize monetary policy. Now, again, obviously there's an enormous lag between the pace of normalization from the pandemic, which has been very rapid, and then the pace of monetary tightening. But that process is underway. The Australian dollar is bid up today versus the US dollar and on the tightening steps. And that just fits in again to that theme globally of monetary policy being tightened. You are coming up on the Fed minutes tomorrow, Wednesday. Those minutes are probably going to have a somewhat hawkish tone to them. Again, just that they are reflective of the last meeting, at which there were some relatively important shifts that occurred, at least in the public rhetoric, where the Fed now is thinking about tapering. And again, consistent with other central banks, they're just starting to put monetary policy on a path that is consistent with what's happening with the pandemic and growth globally, given the dramatic improvements in those latter two items. You had a couple of economic numbers out of Germany this morning. They were somewhat underwhelming, including manufacturing orders, and then the ZEW survey, the expectations component of that, which is most important, that fell short of expectations. Chinese tech stocks are very much in focus. The Chinese government now for months has been taking regulatory actions against a variety of different tech companies, including Alibaba, Tencent, Didi, which is the big ride-hailing company in China that just came public in the U.S., was hit extraordinarily hard with a series of regulatory actions. That stock is off about 20% pre-market on the news today. Yesterday in Asia, you had weakness in a lot of the big technology companies, including Tencent and Alibaba. So that's going to be a huge theme for today in the U.S. As investors become, increasingly wary of the regulatory risks around those companies in China. somewhat isolated as far as the implications for the broader U.S. equity market, but obviously a huge global theme that is receiving a lot of attention. So those are just some of the macro highlights. There's, like I said, a lot else going on this morning. You did have some strength in Eurozone travel stocks. You had the UK come out yesterday and formally announced that on July 19th, as is currently scheduled, they will begin lifting their COVID restrictions. That had been on the calendar for a while. There had been some uncertainty as to whether the UK would push back the deadline, but they will proceed as planned on July 19th. You also had Germany lift some of the travel restrictions on individuals entering that country from the UK, India, Portugal, and Russia. So again, consistent with the theme of COVID restrictions being eased. So that has some of the travel-linked equities in Europe bid up yesterday and then again today. Those are all the major macro topics. Nothing too exciting on the micro front other than what we just went over with the Chinese tech companies. Otherwise, a bunch of somewhat interesting headlines, but nothing that's really terribly crucial. And that is mostly it for the big highlights. Like I said, there's a lot of news, so I encourage everyone to really look at the piece today for all the various different details. On the calendar for Tuesday, specifically in the U.S., there's really nothing. You have the U.S. Services ISM at 10 a.m. That's really pretty much it as far as scheduled news is concerned. For this week overall, the Fed minutes that come out Wednesday at 2 o'clock are probably going to be the most important macro event, followed by China's inflation figures that come out Thursday night, Friday morning. Otherwise, this is kind of going to be a very, very slow week before earnings really kick off, which starts next week with the banks. And you could see some pre-announcements this week as companies, update guidance either ahead or below the current print forecasts. But I think most investors really are kind of just waiting for the start of Q2 earnings, and that Tuesday, July 13th is the first very busy day of earnings in any of the banks that kick the season off. So that is everything for today, Tuesday, July 6th. Thank you, everyone, for listening.